All right, let's talk about tax preparer responsibilities to clients and third parties. Now, I mean, this, like I said, has a lot of the same history in auditing. You are doing a job for a client, you got to maintain independence, all that good stuff. Tax preparer responsibilities to clients and third parties. When you're dealing with errors, when a tax preparer discovers an error in a previously filed return, you're like, hey, what about an audit? If you discover an error in a previously filed audit opinion, hey, similar to that here, they must promptly notify the client of the error. This applies whether the error was made by a former tax preparer or by the current tax preparer themselves. So let's say last year they had someone else do their taxes for them, and then this year you're doing their taxes for them. Even if you discover an error that you didn't make, if you discover the error, then you got to let the client know about it. It's your responsibility to do so. It's important to maintain transparent communication with the client and to address any mistakes as soon as they are identified. Amended returns. A tax preparer cannot prepare an amended return, essentially just a fixed return. You're saying, oh, hey, IRS, we made a mistake. Here's an amended return, or we decided to go this route, so here's an amended return without the client's permission. So the client needs to obviously sign off on it, say, yes, I do want to amend my return. It's kind of like filing a tax return on behalf of someone without their approval. That in and of itself also is a big no-no. This means that the client must be informed of the error and agree to the proposed changes before the amended return can be filed. Furthermore, the tax preparer is prohibited from notifying the taxing authority of the error without the client's permission, except when required by law. Client confidentiality, obviously very crucial for maintaining a professional relationship. And best practices. Best practices for a tax advisor when rendering tax advice involve establishing relevant facts, evaluating the reasonableness of assumptions and representations, and arriving at a conclusion supported by the law and facts in a tax memorandum. This ensures that the advice provided is well-reasoned, accurate, and in compliance with applicable tax laws and regulations. Some more here. Records. If the IRS requests client records from a tax preparer who does not have possession or control of the records, the preparer must notify the IRS of the identity of any person who, according to the tax preparer's belief, could actually have the records. This helps the IRS obtain the necessary information and demonstrates the tax preparer's cooperation with the tax authority. Boy, do we love cooperating with the tax authority. That's my favorite thing in the world, is cooperating with the tax authority. We're making sure we are doing that, helping them out. Noncompliance. If a tax preparer discovers material noncompliance with the IRC for a prior year return for a new client, the preparer should notify the client regarding the noncompliance and recommend the proper course of action. This may include filing an amended return, paying any additional tax owed, or addressing other compliance issues. I don't know about you. I don't have any issues. Who has issues? What's wrong with you? By doing so, the tax preparer is fulfilling their responsibility to both the client and the tax authority and helping the client rectify any issues with their tax filings. Do a good deed. Help out those clients. Make sure they're not having any issues. Next up, we've got due diligence. Hey, it's kind of like you're doing an audit as well. I love tying everything in. Two birds with one stone as much as we can. All of this rooted in a lot of the same logic. A tax return preparer may be assessed a penalty if they do not inquire about the existence of documentation for questionable expenses or business activity that may be incorrect, incomplete, or inconsistent. It's the preparer's responsibility to exercise due diligence and ask for clarification or documentation when necessary. However, if the expenses or business activity seem reasonable, the preparer does not need to inquire further. You're not an auditor, you are a tax preparer. That would be a big ask if you were auditing and doing their taxes, and also probably a breach of independence there. The preparer's job is not to audit their client, and their liability needs to be limited to ensure a balanced professional relationship. We're not doing absolutely everything here. That would be a little ridiculous. Next up, questionable expenses. Now, if expenses end up being disallowed in a tax audit, so they put down that, oh yeah, we had $8,000 of meals, and the IRS audits and says, yeah, no, this was you just going out to the bar with your friends for an entire year and you spent $8,000. Good job, buddy. The taxpayer may owe an understatement penalty or a fraud penalty if the expenses are found to be fraudulent. This highlights the importance of accurate reporting and the need for tax preparers to be vigilant in reviewing and questioning expenses or business activities that appear questionable or suspicious. And then copies of client records. A tax preparer may retain copies of their client's records. So first off, you can see multiple choice questions, asking, hey, can you retain copies of records? Generally, yes, but there are exceptions. And then obviously caveats. So you could have questions that ask you about generalities. They could go into the specifics of that situation. So they can retain client records for their own reference and documentation purposes. Generally, at the request of the client, the preparer must return all client records. However, an exception exists if state law allows the preparer to retain the records in the case of a fee dispute. So that's also something, hey, I'm not giving you your tax return back because you didn't pay me. And I think that's fair, but that's the situation we're dealing with. Despite this exception, the preparer must return those records that must be attached to the tax return and allow the client to review and copy the practitioner retained client records related to the client's federal tax obligation. This deals with not only just the tax return, but also property tax records, titles to vehicles, anything that we talked about, client records before. This ensures transparency and maintains trust between the tax preparer and the client. Got to make sure we have that mutual trust.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.